Good afternoon from Singapore. Welcome to our Radio Finance Dialogue. We've assembled a distinguished group of senior executives from business and technology across leading FIs in Southeast Asia to assess the next steps in strengthening operational resilience, increasing agility, and being able to better serve customers digitally. I am Mubashir Zain Kazmi, Head of Research at the Asian Banker, who will be your host for the next 60 minutes. I'm happy that we have a multifaceted virtual dialogue that will look at the topic from both a business, product, and technology perspective. In recent times, the shift to digitalization has been necessitated by fast-changing consumer expectation to bank whenever and wherever. Customers are taking cues from the digital upstarts that offer frictionless transactions and unique experiences through multi-channel access and seamlessly integrated processes across varied needs, whether business, personal, or wealth management. Despite the digital shift, many institutions continue to grapple with legacy technology and processes that impede their ability to aggregate and use data effectively. They struggle to scale and match their more digitally transformed peers that provide responsiveness, seamlessness, and consistent experiences across channels. The speed of change is key for incumbents to stay relevant and survive in the face of the new digital-first and cloud-native competition. In this session, we will discuss and consider how some of the region's most progressive banks have designed their digital strategy to enable a more consistent banking experience. In terms of the topics of discussion today, we'll be looking at redefining business, operating, and technology models to be more data-driven and customer-centric, integrating artificial intelligence and machine learning to create hyper-personalized customer experiences across channels and value chains, automating and building smart processes and IT services to increase operational agility, efficiency, resilience, as well as security and compliance. And finally, we'll be showcasing some best practices in terms of the implementation of agile data architecture, cloud-native technology, and advanced analytics. The virtual dialogue guests can participate by sharing comments and questions with our panelists by using the raise hand or chat function on Zoom, while the ones listening via Facebook can drop theirs in the comments section. We would like this discussion to be engaging and interactive and strongly encourage questions from the audience. Separately, I would request our panelists to keep to a 3-minute time limit to all of their responses. I would now like to take this opportunity to introduce our guests. To begin, we have Aaron Loo, who's the Managing Director for Retail Banking at AmBank in Malaysia. Next. We also have Reona Shimada, who's the co-founder and group CEO of Crowdo. With us as well, of course, is Kanags Surendran, Managing Director and Head of Transformation at CIMB. Included in this panel is Ishan Agrawal, Chief Technology Officer at Funding Societies. And with us as well is Nick Edwards, APAC Regional Director at Temenos. And joining him as well is Ethan Wang, who's the Sales Lead Asia at Temenos. So before we get into the questions, just to give a little bit of context and background in terms of the digital transformation as we see it deepening the management of banks that we see in terms of their transition towards a leaner, smarter, and more efficient business model. Digital transformation has the potential to allow banks to capture a much larger amount of data from an increasing number of sources and to better utilize this data to aid in terms of business decision-making. It could also facilitate particular banks in terms of reducing their own costs while increasing both operational efficiency and revenue through innovation in products, in services, and distribution channels. And more importantly, with the right implementation, customer experience can be greatly enhanced. But underlying all of this, of course, is the power of modern technologies that unlocks numerous possibilities. And banks in the region are making those efforts in terms of the digital transformation as a means to gain a competitive advantage and, of course, naturally capture a bigger share of the market. So to this end, the majority of lenders have either implemented or are in the process of deploying that agile data architecture, the cloud native technology, and advanced analytics to drive their business forward. So to begin with, we'll look at redefining that business operating and technology models. And I think generally to keep up with the changing times and to stay ahead of potential disruption, the business models of banks, especially as they relate to the front office operations, needs to be adjusted. In addition, modernizing your internal systems is one element that can help facilitate the development of personalized omnichannel products and deliver a better customer engagement. So to kick things off, we'll probably begin with Aaron, and in terms of his experience at AmBank, if you could share with us what competitive advantage that you see in terms of banks building that data-driven, personalized products and services, and how this is being used for customer acquisition and retention.
Thanks, Mubasha. First of all, good afternoon, everybody, and it's a privilege to be here. And thank you for the opportunity to allow me to share some of my thoughts on how we view digital moving forward. From my perspective, and in some ways, AmBank, what we are seeing really is the usage of digital to kind of really drive a seamless customer experience. And in order to do that, it's really about, and it seems easy to say, but it's actually pretty tough to execute. And the reason why is because, especially if you look at the institution I'm working in, we have tremendous legacy systems that we have. I mean, for me to do a single change to integrate a single journey for a client, I'm talking to 5 to 10 different systems. And that is a challenge for us. And I think that we are now working towards trying to start figuring out how do we develop capabilities or enablers to allow us to build the right journeys for our clients to address their needs. And the needs are different. When I think of digital, it's not one big blob. It's what are the journeys I'm trying to build for example, for gig economy workers? Or how do I build a journey for micro SMEs? Or how do I build a journey for mass affluent customers, and so on and so forth? And I think that we have today the ability and enablers to do so, but it's a journey to get us there. So that's how I would look at it, Mubasha.
All right. Great. Thank you for that, Aaron. And I'll also ask Kanags to weigh in terms of his thinking about how you can actually leverage data. Is this been the experience also at CIMB, Kanags?
I need to unmute myself before I talk. So yeah, thank you for having me here. I mean, I think every bank across the world is in some stage of figuring out how to wire or rewire their legacy platforms to create a solution that is appropriate for a customer journey. And that it's a legacy of not just parking the blame on technologies or the platforms, but also legacy in the terms of cultural mindset, in terms of how banks have operated in a very product thinking rather than a customer-centric thinking. When you look at customers, obviously you look at customer journeys, and when you look at journeys, you have to have the capability to address a wide segment of customers and take them through the journey, and that's where data personalization comes in. You might have a mortgage journey that's very generic. How we look at the very different, and for banks to get to that scale of a segment of one journey is where the challenge and the opportunity really lies. And to arrive there at a point where you're able to achieve that at a real low cost to income ratio, where data and personalization journeys do not end up becoming an operational overhead, is going to be the challenge. And I mean, I agree with Aaron. Every bank has got its own challenges, but how you get through that process over the next few years is going to be essentially the competitive advantage for the next half a decade at least.
Absolutely. Okay, thank you for that, Kanags. And looking at it from a fintech perspective, Ishan, perhaps we can pass this on to you as well. Kanags mentioned that segment of one marketing and the challenges we're seeing in terms of the gaps, at least from the conventional side, in terms of delivering those data-driven, personalized financial services. How do you see, at least the digital-ready counterparts in terms of addressing these gaps? Ishan, and then we'll ask this with Leo as well. But Ishan, we'll probably start with you first.
Hi, Mubashir. Hi, everyone. Really glad to be here. So I really like what Kanags mentioned, right? That there's a difference between product and customer thinking. So I think traditionally financial products have been more constrained by, what are the internal limitations? Like we'll offer this kind of product with these interest rates and so on. But customers don't work that way, right? In our business of SME digital financing, we realized that, hey, every SME is unique. So we cannot offer them a bundle of, standard bundle of products. Neither we can assess them in a very sort of standard scorecard-ish way, right? If you think of consumer products, Netflix doesn't behave that way. Like you don't see, a set of stuff, like it's heavily personalized based on your viewing experience. So that's how we've tried to think about it at Funding Society's Madalku as well. I think the advantage that we have as a fintech is that we do not have a lot of legacy to deal with. So we have systems that are native to cloud and use modern technologies. One of the examples perhaps I can give is we built something that we call Smart Application. I promise the product is more innovative than the name. Basically, the idea is that the application form adapts with each new piece of information that you give it, and it's enabled by continuous risk scoring in the background. So I think those are some of the personalized experiences that we're trying to build for our customers.
Absolutely. And Leo, would you like to weigh in on this as well?
Yeah, so thanks again for inviting me. Pleasure to be here. Hi to everyone. So yes, it's true. So we actually just concluded a survey with SMEs in Indonesia about their banking experience. And really the results were articulated in 4 points. Like one is model, the operating model, the customer journey, at least in Indonesia, has been very nascent, right? So in terms of how we're dealing with it, so maybe 2 examples. One is really changing what delivery means. So, we never believe that a customer needs to go to a branch, or even for that matter, they don't need to go to a financial super app, right? On demand for us means that, relevant financial solutions are prompted at trigger points that even business owners wouldn't typically associate with financing. And that could be signing a contract, it could be issuing an invoice, issuing a purchase order, and so on, right? And, we're able to prompt and push financial solutions, through digital means, so that the business owner at that relevant point of time becomes aware and can consider these financial solutions. So that's one, is around delivery. I think the second is really around data insights. So I think that a lot has been said about alternative data sets and so on. I think it's now a given in this day of age. And what we're really focusing on is getting data insights through becoming an embedded financing player, right? Really be acting as a digital middle or back office, so to say, for all these SMEs, so that we have proprietary insights on their business performance, business cycles, and so on. And this is a great way to really customize, truly, the experience for each of our SME clients.
Absolutely, and that is the crux. Essentially, is really to have that personalized experience for customers. And given the nature of this, at least the innovation and change that we're seeing, which requires redefining business operating and technology models. So it also necessitates a rethink of the traditional structures and hierarchies and business culture. My next question really is around technology and leadership, and that relationship that exists in terms of how that can help drive, the change, especially in terms of the conventional constructs and mindsets. for the traditional players and how they can embrace this change. So Kanags, perhaps I'll start with you on this one. How can banks better prepare themselves, and should we be expecting this permanent state of reinvention now? And really, from your perspective, what does true digital innovation mean, and how does it resonate with customers, and what's the interplay between leadership and innovation?
Okay. Okay, there's a lot of questions in one. I think if I were to try answering one at a time, the permanent state of reinvention, I guess we're always in a state of change. The world is moving in. It's just the pace of change has increased in a tremendous way since the digital revolution, or when since the time we had our a chip that is faster than the lunar module on our hands, probably 4 times as fast as that in our hands now. So so essentially it's Moore's law in action, if you will, and so it's a pace of change that is changing. So so there's a double whammy here. One is in terms of the organization's ability to react to the change, number one. Number two, react to and keep with the pace of change. So they are two different things. So if I were to look at it in those two lenses, first is reacting to change. I guess the way things are moved in this sphere with the fragmentation, with the of business models, where an organization like Wise is able to achieve cross-border transactions at a price which is so competitive compared to traditional organizations, is because of the focus that they have. So an organization such as ours, we are universal bank, and we have 20 different products and a million different variety of services. The need of the hour is the ability to focus on what is right in terms of a strategic outlook, and stay with that focused, and fix that, and stay come out competitive on top of in that particular area. That's number one. Number two is really mindset. There is no more, in my opinion, a phase where you can say, well, technology is technology and business is business. They are pretty much interlinked now. So business is operating in the world of technology, and technology needs to understand what the business imperatives are. And you need to find people who are able to operate across the spectrum. And you're either a digital native or a data native. And finding these people is a second challenge that needs to be resolved. It's not just having the cultural mindset in the organization, but having the talent pool that is able to operate across these two dimensions, and being able to scale. So that's number two, right? And three is the pace of change, and to continue to operate and be at the forefront when the pace of change is really high. The way our banks are wired, the way we operate needs to also change. And that's where we talk about design thinking, we talk about agile mindset and agility, and those things obviously have to be in place, because you have to get out of your tech debt of your legacy platforms, but at the same time be able to move fast. And agility is not just having the technology platforms, but also in the way we operate and the way we are set up to operate. So fundamentally, organizations like us need to change across these levers for us to really be competitive, right? If that makes sense.
Right, absolutely. Thank you, Kanags. And Ishan, your thoughts in terms of that permanent state of innovation and reinvention, and looking at how you can really consolidate that, to provide digital, services that really, have gained traction with customers, and looking at also the importance of leadership, really, and having that cultural shift. Or a change in mindset. Any thoughts you would like to add in terms of how this can help in businesses, and banks, particularly in terms of redefining how they're approaching or thinking about technology and innovation?
Yeah, so I think to kind of build on the pace of change has been just mind-boggling, right? So I like to think of this as one of the examples that comes to my mind is a period of 4 years, 2007 to 2010, where 2007 iPhone came out, which changed, the devices that we're operating on. 2009 was the Bitcoin white paper, which just opened up a whole new Pandora box of just some exciting stuff, right? That we're starting to see a lot more of recently. And 2010 was when Google announced its autonomous cars, which I like to think of as the advent of modern AI, the AI as we talk about it these days. So in just a span of 4 years, you have these 3 key landmark events. And since then, there's almost on an annual basis, there's exciting stuff happening, right? But we'll only know in the future, like whether it's AR, VR, or, a bunch of exciting stuff, metaverses, we'll only know in the future how that changes things. So since the pace of change is so fast, I think the only option is to keep reinventing yourself as a person, as well as an organization, right? And I think that's the role that I play as a technology leader within my organization. And I think that's a role that some of us play within our organization as well. So, I mean, in short, like really there's no sort of alternative than making sure that you're reinventing yourself even as a fintech, which is about 6 years old. We start looking at it and we're like, hey, things are changing, right, in the past 6 years, and then we have to keep reinventing ourselves. So I can imagine, this is a thing that's quite important for the bigger organizations as well.
Absolutely. Thank you, Ishan. And I'd like to bring Ethan in on this as well. Ethan, I mean, we've been speaking about the pace of change, and really, what does this mean for all the financial service players, in terms of them being able to build strong customer relationships, and given this pace of change, how can they be positioned really to provide a very consistent digital experience? So Ethan, I'd like to get your thoughts on this challenge as well.
Yeah, so many thanks. I'm happy to be here to share something from fintech perspective. I think Aaron, Kanags, Ishan, and Leo, and others had shared a lot about their experience on digitalization in banking. So I couldn't agree more. I think technology is evolving, customer behavior has been changed a lot and still changing. Digital firms also raised their bar for customer experience. And as Aaron mentioned earlier, easy to say and tough to execute, right? So I would like to share 2 of my observations, more from my perspective, based on where in the past I helped some other banks in the region to digitalize their customer experience. So the first thing I think, we heard about some keywords just now, right? Personalization, engagement, data-driven. When banks are trying hard to invest complex technology portfolio these days in digital, another important keyword I think is probably, I call it simplification, right? So how to simplify the customer journey as well as the staff journeys using digital technologies, how to simplify a omni-channel experience across different digital touchpoints, including onboarding, for example, and how to simplify the way the customer insights was being delivered from the bank side, and even how to simplify your staff, the bank staff experience, by managing all the digital channel security alerts and also the customer requests. So that's my first observation. Right. The second observation, apart from the word simplification, I think measurement is something playing an increasingly important role actually in digital. So how to measure the efficiency and also the financial and non-financial value of banks, let's say digital onboarding, customer insights, and even non-banking services, so that a bank can potentially continue to improve their digital customer journeys. So a digital banking platform with all these seamless omni-channel experience and easy integration with complicated surrounding ecosystems, that's what I see can help banks to simplify their customer journey and potentially making customers buying more products from the banks through the digital channel. So if a bank can, fix it in the very beginning, in the development, I think that they are probably in the halfway to the success to maintain and improve their overall customer relationships through digital channels.
Right, absolutely. Thank you for that, Ethan. And on that point, I mean, we're speaking about how banking is becoming quite invisible, really, to the end user. And given the the saturated environment now for most markets, in the region, there is this pressure, of course, on profitability, on bottom line numbers, on cost control. And that's really, as we've been discussing, fast-tracked or has pressured banks to really accelerate their customer engagement efforts. So one way, we've been, of course, speaking about the application of these emerging technologies, but specifically, if we look at AI and ML, how these can be deployed really, to enable customer engagement and achieve that personalization at scale that we've spoken about it earlier. So, Kanags, I wanted to get your input on this as well in terms of how you see this space evolving and what banks can do or the various players can do in terms of leveraging or utilizing these capabilities to drive better products, services, and being able to connect with their customers better.
Okay. See, in my opinion, there are. I think AI ML is again overused, underutilized word inside banks, and we are probably just scratching the surface on this. To achieve personalization at scale, you will not be able to achieve personalization scale at the cost point that is meaningful if you're not going to be using an AI or ML based technologies. That's fundamentally the first rule of law when it comes to this and cost. And the second piece is not just about implementing, but figuring out what you're going to use these technologies for and why they make sense. So rather than talking about why a technology is relevant, the right thing to ask is, what is a business outcome that is actually being solved for, and what appropriate use is AI and ML technology that's going to solve and provide for. And that should be the way to approach this rather than force fitting a square peg into a round hole, which is probably what is happening across most organizations right now. The place where at least we have tried using this is specifically around database personalization, and real-time personalization that we have been engaging with over the last year and a half with our customers. And it's been quite useful because when we are able to track how we are able to increase usage of some of our products with our customers, some of our solutions with our customers based on these personalized interventions that happen on a real-time basis, it's quite phenomenal what you see in terms of the uplift in both customer satisfaction and NPS, as well as top line, because of the customers using your product, and it sustains even after you stop that particular engagement for that customer, because they have seen that relationship being a lot more meaningful, which is what these capabilities, these technologies enable us to provide. Yeah.
Absolutely. Thank you for that, Kanags. And Ishan, your thoughts also on in terms of utilizing AI and ML from a fintech perspective in really driving customer engagement.
Yeah, I think one of the points that I mentioned earlier is a good example, like the smart application that we're able to do, right? But the way I see AI and ML is, if you've implemented it right, it should just be obvious, right? It should, like you were talking about banking being invisible. If you've implemented AI, ML right, the customer shouldn't care about it. The customer really doesn't care what technology you're using, right? At the end of the day, that's kind of our problem. Yeah. Similarly, like when you use Google Maps, you don't really know like what technologies behind it. So we try to think of it that way as well, like again, keeping the customer first. And if AI is required, sure. If a simple, piece of code does the job, sure, right? So I think sometimes we kind of oversell the sort of whole AI and ML aspect. While I think there's tremendous use cases, right. I'm not denying that, but I think there's also a strong need to look at what the customer needs and then just kind of build those solutions for the customer.
Right. Excellent. Thanks, Ishan, and probably bring in Leo on this one. Leo, your thoughts in terms of how they can also address those customer pain points, and these advanced analytics being used as a differentiator.
Yeah. Right. Okay. Yeah. Thanks for that. Look, so our hypothesis has always been that, like, look, improving customer experience is not only about making the funnel more efficient, but using AI and ML actually to get more people into that funnel, right? So I think that if we look at the challenge that a lot of the conventional banks actually face is that, despite the high rejection SME loan applicants, right? So we see 40 to 60% of SMEs on, in samples that's being denied loans. And this is for a segment which has close to 5 to 8% MPLs, right, for the last like 12 to 18 months. So it doesn't really encourage a lot of banks to open up the funnel due to the risk and return profile, right? And then from a customer point of view, the pain point is clearly like they just don't get into that promised land of getting into a funnel where everything's personalized and everything's like customized for them. So for us, we really view AI and ML as a critical way for widening that customer funnel, the entry point, and using it as a key differentiator and as a way to really
I think we can move on because Leo is having some.
Okay, absolutely. So Nick, we'll probably bring you in on this just to follow up on the thoughts that Leo was sharing. From your perspective, looking at the the application of AI and advanced analytics, how do you view this in terms of providing a more safer, more robust setup for financial institutions, and what value does that provide in terms of potentially new digital opportunities for both banks and fintech players?
Sure, thanks. It's a pretty interesting question. I think probably the first point to make is that, I agree. I think Ishan was saying before, AI and ML can be a bit of a tagline, a bit of a trend. I think that's true. I also think that it's not new in our industry. I come from Australia, and using advanced analytics and computers to execute those models has been done for many, many years. What's different now is this level of sophistication, the kind of use cases that you can target, and the kind of tools that are available to make this more accessible across a banking organization, or indeed an ecosystem for that matter. I think I think that how does this make it safer and more robust? Well, if we take an example, and I'm going to use the lending decision, we kind of all, is probably the biggest, most important decision that banks make day in, day out across the world. And in the past, that decision has been a function of, going way back when, if I get credit, will be a function of how well I know the bank manager. And that was then superseded by a branch transaction that was back-ended by a paper process in an operations team. That kind of a process is open to bias. Everyone has bias in how they interpret information. That kind of a process is slow. It's expensive. Yes. I think Kanags before was talking about the efficiency that's available now. And that kind of process as well, because it's driven by humans, can only consume so much data that we can comprehend. And as a result, the outcomes of those decisions aren't necessarily optimal or the most predictive. So if you kind of fast forward to in some banks today and for other banks, the opportunity that exists in the future, that kind of end-to-end process, if it's underpinned by automated decision and the right kinds of technologies and models throughout that process, you've got an opportunity to reduce bias, to reduce the cost and the speed at which the decisions are made, giving you an opportunity to scale, giving you an opportunity to reduce the cost to serve and consume infinitely more data. It's interesting listening to Leo talk about the kind of data or looking beyond the traditional data sources to broaden out the funnel. And so all those things are huge opportunities and and provide us huge upside in terms of security in our industry. And so that little example there can be extrapolated across fraud, across KYC, across portfolio management and marketing, chatbots, many, many more. So you know, the potential is huge. There's no doubt about that. But probably for me, the thing that makes this relevant for this conversation, you know, beyond anything else, is that it's an enabler of convenient interactions with a bank. And for me, you know, I'm very passionate about this. In digital, if it's not convenient, you will not win. You will not win your customer. You will not win their loyalty because it's too easy to change. Yeah. And so for me, above all of those things, the opportunity now and in the future with these technologies and other technologies is about what is the optimal, convenient experience we can enable for our customers in that digital channel.
Absolutely. Very good points, Nick. And on that, you know, if it's not convenient, you will not win on digital. And I'd like to bring Aaron in on this because it's quite you know, relevant in terms of how banks can help their customers, you know, to complete these complex digital transactions and ideally in a seamless and frictionless manner. So, Aaron, your thoughts on the convenience piece and essentially, you know, ensuring a frictionless digital experience for customers.
Right. First of all, I kind of really like what Ishan and I think Nicholas mentioned earlier. AI ML is really an enabler for us to implement something or convenience, as you put it, timely convenience or timely intervention for our clients. And I kind of look at it in two dimensions, right? From a client's perspective, and I think Kanags had mentioned earlier a little bit about creating real-time interventions to the client in a timely manner. So for example, things that we are working on now or on my end, quite similar to what Kanags is looking at, is just kind of going through the client's users or transactions and trying to understand and identify things like, is it timely? For example, you have a little bit of excess cash, you spend a little bit less this month than you normally do in the last couple of months. Can I encourage you to move it over to a more higher yielding depository product or to save it for a future rainy day in a small unit trust kind of fund? Or for example, remind you to pay your bills. I think these are things that are real-time, useful, and kind of creates a personalization and brings that engagement of the client. And we kind of see when you have high engagement levels, right? Typically, from our data anyway, we're seeing product holdings going about maybe 20% higher on a blended basis. And if you're moving up the food chain or higher up in the value chain, it could be as high as 30%. So those are things that I think are really positive in terms of enabling this sort of timely interventions using the right capabilities. The other way I look at is also from the bank's perspective. I think one of the things I think a bit hard for us, and I think some of the panelists mentioned about how do we intelligently underwrite some companies or some individuals, because the traditional model that we are seeing is beginning to really shift, right? You're seeing the gig economy starting to really come up. A lot more different types of economies are starting to grow, social media influencers, part-time income coming in, and the traditional underwriting models probably don't really capture that as well as we'd like to. And so it's really right, using capabilities to first understand something simple as, can I use social media information that is so readily available out there to kind of figure out whether when you apply for a loan for me, can I use that to kind of figure out whether your credit's good, rather than a traditional, let me look at your income doc, let me look at your bureau score, let me look at your negative bureau, and kind of figure out whether you are a great customer for us to onboard. So those are things that I think we are kind of looking at to create a more frictionless engagement between the client with us. And on top of that, it's really about something as simple as onboarding. I'll give you an example. It's also about the mindset change. I think some of the panelists mentioned earlier, it's also within the organization, the mindset change to do this. It's not just the technology, it's the entire organization, the product managers, the risk managers, the compliance guys. We have to start really rethinking the way we traditionally look at things in order to execute these. And a classic example is, we launched this ability to onboard an SME fully digitally. done face-to-face, fully digitally, right? Don't have to see the customer, go on board. We can get you in, but then we kind of face a bit of a snag. This was already quite a while back. We faced a snag because the regulation said you need a signed board resolution stamped by the company secretary before you could do that. And that was a bit of a snag, right? Not very digital when you go all the way there. Yeah. And then suddenly like, oh, by the way, please sign this piece of paper. So we took a while for us to get through, but we got past that obstacle. But and that kind of extends really to the larger, whether the regulations of the land that we operate in are even ready to start help enable these experiences for our clients.
Yeah. Absolutely, some very good points there, Aaron, and some great, I think, data and results that you've shared with us in terms of how you've applied data-driven engagements. So probably bring back Leo, I think is with us. Leo, from your side, if you would like to also share with us in terms of how you've approached this, and probably just follow up also on the points you were making earlier in terms of the application of AI and ML, but broadly in terms of advanced analytics, really, and how are you using that to support?
Right. Okay. Thanks for that. Yeah. So maybe just to finish off their earlier point, right? So we really use AI ML as a differentiator to really widen the entry point, right? And this is by using alternative data like Aaron mentioned. But also about getting deep in proprietary data as an embedded finance player. And the numbers really speak for themselves. So on a comparable basis, the approval rates, you can actually improve your approval rates by 2 to 3 times, versus traditional banking acceptance rates. And you could achieve this without any compromise in credit asset quality as well, right? So our NPLs are 40 to 60% lower than the banking sector on the comparable period. So you could imagine a world where you combine all the initiatives on this panel, right? So one is widening the entry point, getting creditworthy customers digitally through the door. And then you have the timely interventions and also the customization recommendations that that Aaron and also Kanags have also talked about too. And I think that's amazing potential of really using AI. And this is something that customers truly appreciate. I mean, I could tell you with 80 to 90% retention of new customer monthly cohorts, that basically means that, look, they don't see it. They don't see, oh, this AI engine and so on. But customers, once they actually go through the experience and once they do appreciate it through, financing to grow their business and so on, once they enter the system, they just never leave. And I think that this is something that, is important in solving customer pain points and, improving business as well.
Right. Thanks for that, Leo. And Kanags, if you'd like to weigh in as well in terms of how you are applying this and what results you're seeing, in terms of the service enhancements and the improvements. I mean, certainly there's been a great deal of automation. The deployment of smart processes. We discussed that earlier as well. So from your perspective, in terms of having that agility, the efficiency, would there be specific results that you would share with us from CIMB's perspective, Kanags?
Yeah, definitely. I think, automation, AI, ML is a very broad spectrum, and solutions inside banks would vary from simple back office automation to all the way to a front-end eKYC solution, which is still reliant on your facial identification and a whole bunch of other parameters. And of course, there's fraud, there is the scoring. So there's a lot of different applications. So I can talk about 2 specific areas. One is simple automation using RPA, which has significantly reduced the amount of time it takes for us to key in data into our loan origination platforms, especially when you talk about SMEs and mid-corps. When we have to issue loans of ticket sizes about 1 million ringgit and above, you need to have a way to process their bank statements, their financial statements. You write their cash flows, and sometimes having to keying in 400 line items into the system because you need almost 6 months of data of their bank statements to really analyze that. Those are non-value-added activities that you're forcing humans to put up with when you have enough RPAs and OCR systems out there that can do a better job, and you upskill these resources into doing something a lot more meaningful. So that's one simple area that has shown tremendous outputs. The second one is obviously using eKYC for onboarding new to bank current account and savings account customers. Thanks to Bank Negara's new policy, we're able to do that, and that obviously needs facial recognition, and it needs the ability for us to compare and authenticate your IC card that it is actually the right card and it's not a forged one, as well as compare your face against what is on the card. So those things are again AML solutions which we use to speed up the process of onboarding customers into our system. So those are two examples that I can give, which we have implemented in the last year, which have shown quite significant results, if you will.
All right, awesome. And perhaps Kanags and we'll probably have Ishan also weigh in on this. Can you give us a sense in terms of the the impact these service improvements are having on your costs, on your potentially your profitability, or perhaps impact in terms of incremental revenue? How are you measuring the success of this internally? Perhaps we'll start with you, Kanags, and then we'll bring Ishan on board as well.
Yeah, so we look at, at the end of the day, any digital project or any transformation project needs to be focused on business outcome and not a tech for tech, which is not what it is. So when you look at, for example, the SME onboarding platform, SME loan onboarding platform or journey that we looked at, our aim was to reduce the turnaround time for these loans from what it used to be to about 5 days now on average, for 5 to 6 days now on average for our customers. And these are loan sizes about $1 million and above, and those used to take a really long time. And by creating a journey that has digitized the solution for our sales staff, as well as reduced the need for the sales staff to meet our SME customers face to face in this COVID environment, and streamlined the OCR and the back office processes, it has reduced our turnaround time quite a bit. And that obviously means improved productivity, because you're able to pre-score, you're able to pre-analyze these customers so that you don't have to send 10 applications to the back office to see only 2 get processed. You can, the RM upfront knows which of these is going to get processed or has a better probability of getting processed. So he's able to focus his efforts as well. So it's productivity benefits all through across the whole chain.
Right.
Same thing with the eKYC. Again, enabling that solution we get about 10% of our accounts open per month right now from our eKYC solution in Malaysia, and that obviously reduces footfall in the branches, has helped us take away that cost associated with that opening that account, and has completely made that digital. But it's not really cost game over there; it's about a scale game that has to be played. Because once you digitize, obviously cost is going to go down, but it's the ability to scale that is critical.
Absolutely. Thank you for that, Kanags. I'll bring in Ishan as well on this. And Ishan, perhaps if you can share your perspective on that and give us a sense also in terms of how you see the impact of regulation, potentially around data as well, and security. Given that we could potentially use advanced analytics more ethically. And you've got different jurisdictions looking at it from different perspectives, but wanted to get your sense on this as well, Ishan.
Sure. I think so maybe let's start with there's a bunch of questions there, right? So let's start with the data and regulatory aspect of things. So I think one of the things to be aware of is, for example, right? I think we also talked about AI there. If you're looking at credit scoring, like AI, of course, is a broader term, right? So you can have things like deep learning, which are slightly more relevant for facial recognition, text analysis, and that kind of technology. But when you feed in a lot of data to a deep learning model, you are actually not quite sure of how the accuracy or what led to a certain prediction. That may even introduce a certain bias, which you're trying to remove from your underwriting models. And it is pretty much a black box, right? So if there's any conversation with the regulator, you basically can't say that, okay, what actually led to the result. So I think you definitely have to be aware of what kind of regulatory requirements are there, and what kind of how do you support the kind of how do you enable the implementation in the kind of environment that you're in? And for fintechs, that is very important, right? So I think when we're making these technology choices, we also have to be very aware of the regulatory environments. And similarly for security, I think all of us in the call are in the banking space, and trust is a huge aspect of what we do, right? Building that trust. And when you move these experiences digitally, building that trust becomes all much more harder, right? Because you only interact with a website or an app. Yeah. You're not seeing anyone in person. So whether it's through KYCing or applications and so on. So I think cybersecurity plays a huge role in building that trust out with your users. It can be through small prompts, while they're in the process of an application of a loan or onboarding through an account, where it could be small prompts. It could be constant engagement with the users, reaching out to them via various channels on, what are you doing in the form of cybersecurity? Mm-hmm. It's very common to hear, a hack happened here, millions of users' data is lost. And in the long run, it does hurt your brand a lot and the value of your company as well. So I think this is something that especially, I think startups tend to take a bit lightly, but something that I feel like we've sort of thought about a lot and invested very heavily in.
Absolutely. And like to get Leo as well to weigh in and looking at it from those potential risks that, fintech players would need to be across. We had Ishan also bring in some very good points, especially around trust. Leo, your views in terms of how we can, at least create a system or setup that is not really unfair or discriminatory, for customers. And I really wanted to understand what your thinking is around that. Is this a priority for you as well in terms of preventing biases?
Yeah, no, I think this is a really, really good point that Ishan brought up, and it's true. So either, you're refining your data, your credit quality and credit scores are getting so accurate, you just, the model is creating it's biased towards a certain segment or certain attributes, right? Or you get into an area where you just don't know what the results are. And so for us, basically, there's no perfect answer, but the way we've dealt with it is really by just expanding or understanding the interdependencies between what look like, independent communities on the surface, right? So we focus a lot on supply chains. Mm-hmm. So you could say that, look, if we deal with trading companies, those trading companies are linked to manufacturing companies, logistic companies, and so on, right? So, expanding through some kind of like interdependencies is a way that, we don't just focus on trading companies, right? And I think that's one really good example. I think is like, it doesn't need to be, traditional businesses which are in the traditional value chain or supply chain. It could be independent merchants as well, right? But sitting on independent merchants, but, broadening out to online marketplaces where, there are related categories and so on is another way to branch out. So it's really kind of like acknowledging first that there are biases, right? Your AI and ML is not perfect, but really just kind of like having that, manual hand to guide the development of the AI, so to say, right? And I think that's the way you basically negate the biases that the system are creating.
Okay, thanks, Leo. And then probably bring in either Nick or Ethan. We spoke about the biases, we spoke about trust as well. Getting the digital proposition, the digital experience right is of course fundamental and critical. And to navigate all of these potential pitfalls, is essential. So wanted to get also your thoughts, Nick and or Ethan on this.
Probably Ethan, you can go first, I think.
Yeah, so I think actually I think people have said a lot of things. So eKYC, onboarding, and automation, facial recognition. I just think there's one thing I probably want to add on in terms of the in terms of process automation and other things. So for me, what is critical is not just about how to, automate process, but also it's about how flexible, the digital infrastructure can enable the changes to the process and to the future. So as we know, the customer requirements are changing monthly and daily. The onboarding workflow, all these sort of things are changing, and the ecosystem is changing. So we need an infrastructure to have the flexibility. That's what we see in the past, and also now for banks to have the flexibility and also the scalability to potentially adapt the changes without disrupting the customer experience. Then the bank can potentially help to enable the frictionless experience today and also tomorrow. That's what I see here.
I think the only other thing I'd add, and just kind of reflecting on the conversation and the different perspectives of incumbent banks versus fintechs, and as you hear, in particular from the fintech perspective, it's a little bit more around banking is not, or digital banking is not just around banking, and I think it's super interesting to think of the risks for our industry, and let's face it, our industry is a super risk-averse industry, as we are led outside of the train tracks that we've spent the last 200 years in, and really fast. And I think that it's inevitable. It comes back to my point around convenience, but it creates a huge shock factor potentially for banks. Some of the more progressive banks are there or are getting there. But we speak with lots of banks in our jobs, and I can tell you that there's a huge middle sector in the industry that is far more traditional in their thinking. And when they have to get to that point of change, and we were talking before around rapid change, that level of that cultural influence is going to be super, super important.
Yeah, absolutely. Thanks, Nick. And on that, I mean, looking at how rapidly, how quickly we've been speaking about this change and how this ecosystem has been evolving, and getting that experience right, getting the digital journey right, as of course has necessitated rethink by financial institutions. An important, of course, connection that we need to draw is the use of agile data architecture, cloud native technology. What that means in terms of being able to aggregate all this vast amount of data and to really drive that superior customer experience, and to build that personalization at scale. So given all of this, and these advanced analytics, I'll probably bring in Aaron on this one. And if he could share, some of the use cases or best practices, that have also generated very successful customer journeys, in terms of, the application of agile or cloud native or advanced analytics from that context. So probably hand it over to Aaron.
Sure. So to me, if I look at, say, cloud native technologies, it's an area that I'm kind of actively exploring right now, because when I look at the capabilities that I think some people call it fourth generation core banking solutions, and the ability to hyper-personalize a product from the client's needs perspective, it's actually quite interesting for us, because that then allows the clients to actively manage his own personal finances without having to kind of talk to someone at the branch or to even restructure his loan, for example. So it's interesting for me, because what we are seeing evolving outside of Malaysia and in some ways coming to Malaysia, abilities for example, customers for something simple, take a personal loan. Right now, if you wanted to change your tenure, change your interest rate, restructure it, it's actually quite difficult. You're gonna have to talk to someone, sign a bunch of documents, and then maybe we'll let you do that. Whereas what we're seeing coming on shore is complete ability for them to choose what they can and want to do. They can choose when they want the bills. They can choose when they want to pay, what dates they want to pay, rather than the bank telling them when to pay. They can choose payment holidays. I want payment holidays then. I want to maybe actively say, instead of 24 months, I want 36, then a couple of months later, change my mind to 24 months. That's just one use case. And we're seeing that coming in, and that's the competition. Now, the question is, how do we then compete on that one with what the capabilities that we have? And that's why I think we're starting to explore looking at cloud native, for example. And as well as advanced analytics, where we are then able to then mine the data, because I think someone said, someone I overheard said that banks have tremendous amounts of data. We just don't know what to do with it. Yeah. So that's where the advanced analytics comes in. And really, again, I like to bring it back to the customer. It's just building that customer experience and using these enablers for it. So that's an area I think that we are actively exploring, but it's not so easy to do. Again, it sounds easy, sounds great, but the execution is again tricky because we still have this legacy, right? I still have a core banking solution, I have a credit card solution, I've got a workflow solution. What do I do, right? So it's one of three states. It's either A, we say bite the bullet, migrate everything. B, we basically say, do a hybrid. Basically, perhaps potentially say, hey, let's launch XYZ powered by AmBank, and then essentially say, hey, new capabilities, new products, new segments of customers will power through this engine, and then the more traditional customers stay on. And the third one, of course, is just try and build those capabilities within the existing legacy infrastructure, which is not impossible, I suspect, but might be a bit challenging. So those are things that we're grappling with, and there's no real answer that I can give except to say that that's something that's really we're taking time to think about on how we want to move forward.
Certainly. Thank you for that. Certainly, it's important in terms of how you can build that out. Ishan, wanted to also get your perspective from funding societies. This application of agile and cloud native and advanced analytics, and what that means for strong customer engagement.
Yeah, I think it's a very sort of different experience for us, right? Because we're kind of born in all of these cloud native technologies. So we didn't have to deal with a lot of sort of legacy systems and stuff. So, but I mean, I think cloud or cloud native kind of makes sense, right? Because you want to focus. I mean, I like what he said around bringing back to the customer, right? I think ultimately it's about providing like a very strong customer experience, right. And these technologies enable you to do that. Like for instance, if you're looking at Apple stores, they provide you one of the best in-store customer experience, right? But they don't necessarily own the building; they just rent out a space.
Right.
And similarly, being cloud native to me is like very similar to that, right? So you focus on the problem that you're best at and use the most cutting edge technology to enable that.
Absolutely. Technology is an enabler. Thank you, Ishan. Kanags, wanted to also get your sense in terms of what those key benchmarks would be or markers that you are using or to measure your success, given the pace of change and how fluid and dynamic the environment that you're working in. So any thoughts on how you're measuring the success?
See, I mean, NPS obviously is a good old benchmark that makes sense, irrespective of whether you're a traditional organization or an agile organization. It's a question of how you're reacting to customers' needs and how fast you are. And I think that overall covers a significant benchmark. And I think the second piece is, I mean, obviously as banks, we look at our PE ratio, we look at our ROEs and those things, which and the cost income ratio, which I think if you're doing the right thing, those levers will be moving the right direction. But if you look at internal specifics, then you each department within have specific and target that we look at in terms of our digital capability or talent retention and talent acquisition plan, as well as when we look at these transformation initiatives, how those initiatives are playing out, and if those are really creating an impact in terms of measurable impact in terms of how those solutions are provided to our customers or to our internal staff. So there's multiple layers of metrics that you typically use, but I don't think you can necessarily measure this in one particular way, because I think you're in a place where the organization needs to transform. You don't have a way, or you're going to be a laggard, like Nicholas was saying, and you got to end up catching up at some point in time, and by the time it might be too late. So so you have to move fast, quick, and keep up the pace. That's the only way. Yeah.
Absolutely. Thank you, Kanags. I'll get Leo also to share his thoughts on this. Leo, playing catch up, and you're certainly well placed or well positioned, from that perspective. You're thinking in terms of hitting the sweet spot in terms of delivery of digital banking experiences.
Yeah. So I think, yes. So like Ishan mentioned, we have this kind of like advantage of not having a legacy system or infrastructure, right? And I think that for us, we're a bit spoiled for choice. And I think that hitting that sweet spot is kind of like how we actually are able to maintain the fundamental, right? So when we talked about, when we originally started this business, and what our guiding principle is that, as I think Ethan mentioned earlier, the banking experience needs to be simple, right? So I always like to say that, look, I can literally run my bank on my mobile phone, and I haven't been to Indonesia in the last 18 months, but, during that time, the customer base, everything has quadrupled over time, in the last 6 months. Yeah. And it's because at any given time, I could pick up my mobile phone, look what's happening, and also manage some of the internal processes, on my phone as well. And I think that, that's kind of like on the simplicity side. And then the other thing is about being able to adopt these technologies in an economical way, right? So, we've prided ourselves that, look, we didn't really think that we needed to reach scale to be profitable, right? We said that, look, we want to be a technology-led company, super productive, adopt new technologies, and, have a real business profitable from day one and keep on scaling. And I think that, as we scale and go faster and are faced by new technological choices, it's really, someone was mentioning about choices daily on what technologies to adopt. It's true. It's like I used to work in consulting. Like when I went to a client, we would do buy, build, CapEx decisions for the next 3 years. And we finish it, and then we do high fives, and, a year later we come back, right? Now it's more like every day or every week, we're like, okay, we have this decision we need to make. Analysis, we have 5 minutes to make up our mind, and these are kind of like the things that we're grappling with. In terms of what we figured out in the end is one is that there are a lot of great technologies out there that we should be very fast in adopting. The second thing is that we shouldn't be too prideful about our own development capabilities, right? So as a fintech startup, we're number one. We're number one at everything. But there is a time and place where you need to decide that, look, there are actually really great solutions out there which plug in really well with your existing systems. And I think that lastly, just bringing it back in a loop, just not forgetting that, look, it's not an EKYC, it's not an OCR, it's not an NLP, it's about customer experience, right? So kind of like bringing it down back to that perspective, helps us guide us on these, product decisions as well.
Yeah, absolutely. Thank you, Leo. As you mentioned, it's all about that customer experience. So Nick, Ethan, any final thoughts on this in terms of that, hitting that digital delivery of superior customer experience?
First, I would like to clarify one thing, I think, about the question, actually the earlier question. So when we talk about the cloud native technology and architecture, I think it not only applies to core banking or backend systems. Actually, what we see here is we constantly see and increasingly see how cloud native architecture plays a key role in banks' digital channels. So that's one thing. So now back to the question, and also I think I agree with all of your says about how to measure, how important the customer experience it is. And for me, what are the key markers for a successful digital experience? I think there's no global standard. There's no global standard in terms of benchmark a successful digital experience. But apart from those fundamental things like security, safety, risk management, there are still some key elements that I personally think banks should probably consider. So I quickly mention a couple of things. First is something probably some banks are already doing. It is about the value of the digital engagement, financial and non-financial. Let's say, for example, how many transactions customers are having through the digital channels, and what's the percentage of your customer engagement through the digital touch points, and how about your customer experience ratings through the digital apps? The second thing, which is probably some banks are missing in their current measurement today, for example, the value of the digital efficiency. Let's say how fast a customer can complete an onboarding process and how relevant your customer insights or personalized offerings could be. And the third thing could be very interesting. The third interesting period from my perspective is about the value of digital ecosystem, right? The more services and transactions nowadays are potentially initialized through a third-party ecosystem website, or some banks are actually taking an approach to offer some non-banking products. So a measurement from or impact from this perspective could be something very interesting. So that's my observation.
Yeah, and I'll just add a couple of additional points to that, if I may. So I think the concept of traditional metrics of success versus non-traditional metrics of success become very important here. And in our industry, we're beholden to financial metrics of success and product distribution metrics of success as a general common theme. And I think as we adopt more digital services, as we engage with our customers more digitally, we're going to have to think of different ways that we measure success, like Ethan was talking about. In fact, Ethan and I had a long debate about this in the office probably a few weeks ago, as we're writing a white paper on the topic. And if you forget banking for a moment, and you look at what some of those leading light new platform businesses or digital businesses that that are in the world, how they measure their success. Obviously, there's financial metrics, but the measures of success are much more tied to digital engagement. How many times is a customer actually performing a specific task? How many times are they going back? Real-time feedback as part of that as well. So that direct line of communication. So that was the first thing I wanted to say. And just on one final point from me on the topic, I think the concept of legacy and change and shifting to the future is really interesting. I always think of whenever anyone talks to me about legacy, all those decisions were made within a bank for the right reasons at the right point in time. But I think it's super interesting now to see how different banks deal with those hurdles that they have to combine. And I think Kanags talked about a couple. I'd add one more to the list there, which is around stratifying the bank's architecture. So it's not easy. I mean, we all know it's not easy to move off your core banking system. But if you can protect your core banking system with a layered architecture, with a loosely coupled architecture, this is obviously for incumbent banks, you enable innovation in the front without necessarily impacting your back-end systems. And so there are ways to limit the function that your core banking system has within your institution beyond one of those kind of mass migration type of scenarios. Right. And I think the second part of that is that what's really pleasing in all of this is that banks realize that what got them to here is not what's going to get them to there. And so there's a huge amount of thought, probably more than I've ever seen in my career, around trying to tackle that challenge and trying to tackle the challenge of how to embed agility into an organization that actually hasn't really changed that much in the last, say 100 years.
Yeah, absolutely. I think this is certainly going to be quite impactful to the industry, Nick. And given the pace and speed at which digitization is taking place in this very complex competitive environment, I think being future-proof and being ready is going to be paramount for the traditional players. Being able to provide, and as we've discussed, those highly personalized experiences at scale, engaging with customers, looking at those different, Nick just pointed out, in terms of the non-traditional metrics as well. And you know, there's the learnings from other industries in getting that customer experience right. So you know, certainly you've got different players bring that value to customers, and really it's built around addressing their pain points and forging and developing new business models. So it's really institutions having a rethink in terms of their traditional setup and using technology as an enabler. And given the you know, the low barriers of entry, you know, and the fact that you know, different new emerging competitors who are operating and you know, playing by their own rules and different rules really, you know, banks, traditional banks, they have their work cut out for them, and so really being able to upgrade, enhance, you know, provide those operational enhancements and service delivery, I think is going to be fundamental across the entire chain. So with that said, and a little mindful of time as well to wrap up, I would really like to thank all of our guests today, Aaron, Kanags, Ishan, Leo, Nick, and Ethan for joining us, and would like to also thank the audience, of course. Hopefully that they've also benefited from these very insightful conversation and perspectives that have been shared by our guests. To wrap up, really, to share with everybody that, you know, a recording of this session will be available on the Radio Finance website for download and playback. So we always encourage you to keep a lookout for that, and also register for our upcoming sessions. And so with that said, wishing everybody a good day, and thank you once again to everybody. So we'll wrap up now.
Thank you, everyone.
Thank you, Mubasher. Thank you, everybody. Thank you.
You're welcome.
Thank you.